Hey there, Lincoln here from bullacademy.org. Today I have some huge news from you if you're a SoFi investor or if you're an investor on the stock market and you want to build more wealth. This news is very big. I've been talking about IPOs for a very long time and how the retail investors get screwed out of building wealth, that the institutional investors and all the wealthy people out there who already have millions of dollars in their net worth get to participate in private investments before they actually come onto the public markets, and then we have to buy in after the huge pops on day one when they go up 30%, 40%, or even 3x, right? Like Snowflake and Airbnb and DoorDash did. But now SoFi, which is going public via a SPAC, IPOE, Chama Palihapitiya's social capital SPAC, SoFi is changing the game in a huge way, and I want to discuss that with you today and tell you why it's such a big deal and why I'm so excited about SoFi as an investment. I'm investing very heavily into SoFi. This is my biggest investment. So I'm very happy as a retail investor, but also as a investor into this company. And I think that's going to be a big game changer. And of course, Robinhood has signaled that they want to do a similar thing, but SoFi is going at it right now. They're doing it. So let's talk about this big news. And if you are out there watching, comment your thoughts in the live chat. I will get to those at some point soon. But before we get to this news, if you enjoyed the video, like the video below, subscribe to the channel, hit the notification bell. Let me know that you enjoy what you're seeing here, so I can keep doing these. And if you want to help the channel, channel reach more investors, get more access to me, and get direct answers to your investment questions, then join us over at patreon.bullacademy.org. That's where we discuss the stock market in real time every day and share our thoughts on stocks and SPACs that we're all invested in, and share news, rumors, and any ideas so that we can all collaborate and do research together. We got in early on CCIV, SBE, ChargePoint, IPOE, SoFi, and so many other great deals before everyone else had a chance to. Thanks to all of the collaboration. There's about 100 of us now, so if you're interested in joining, I hope to see you over at patreon.bullacademy.org. Let's hop into this big news. I'm very excited, as you can tell, and let's just jump in. So, if you have never heard of SoFi before, SoFi is a one-stop shop for finances for millennials, right? They make it super easy for millennials to bank online, right, with high interest rates, to get student loans, and to refinance their student loans, and to get mortgages, and to invest in the stock market, right? So many different options here on SoFi. They have it all listed right here. SoFi Invest, get your money right. SoFi Money, SoFi Credit Cards, student loan financing, private student loans, personal loans, home loans, SoFi Relay, which allows you to manage to see a high level of all your finances and keep track of all of that. And they have insurance, and they have small business financing. So I am a huge investor in SoFi, and I love everything they're doing. But this news beats everything so far, right? For stock market investors, those who want to build wealth, and SoFi makes all of that easier. So I've been with SoFi since 2019, and I can't stop saying enough how excited I am. So SoFi they are making it possible for retail investors to invest in pre-IPO companies. So on the day of, okay, let me back up. I'm a little too excited. Let me just back up for a second. So I've covered how IPOs work, how the stock market works in the past on this channel, bullacademy.org. We have many videos on, let me find it real quick. So we have videos explaining how the IPOs work, and oops, I'm looking at the wrong section. So I want you to know that there's many videos that we've done on explaining IPOs, and this one I just did recently on explaining the IPO pop and how it hurts retail investors, and how SPACs have been able to help us get in early on private companies going public, like CCIV, Lucid Motors, and ChargePoint, and DraftKings, and SoFi, and so many others, right? That wasn't possible until the SPACs came around, because most of the IPO allocations, when the companies go public, what they do is they go to a big investment bank and say, hey, we need help going public, can you underwrite us? And then that investment bank goes out and they find all these rich institutional investors, these very wealthy people, and they say, hey, we have this great new deal. This company is going public. You can buy in at a discount before they actually hit the public markets on the IPO day. And when they hit the IPO, and when they hit the market, the public market, it's going to pop because you got in at a 50% discount, at a 100% discount. So like something like Snowflake, when they bought in, it was at like $45. It was either Snowflake or Airbnb. They got in at like $45, and then the next day, it's on the IPO day, it pops like 90 or even 200, 300, 3x, right? Airbnb, we started off with Airbnb, DoorDash, all the big names. That's what happens, and we get left out of that. We have to buy at the very top, right? So we don't get allocations. And those who do, those on the retail who do get allocations, are those who are millionaires, multi-millionaires. The small guy doesn't have a chance to participate in that great appreciation on the IPO day. So that's what this whole video focuses on. And of course, there's a bit of satire in there. So you should go watch that. It's fun, but also we get into the seriousness of how they keep us poor. They keep us poor by not allowing us to participate in IPOs. So SoFi is coming out and saying, hey, we're changing that. We are going to allow retail investors to invest in IPOs as well. We're going to give them allocations. So SoFi Invest, which is their stock investing arm, is launching IPO investing. And they say, let me calm down and let's read through this page, and then we can watch their video. It's a 2-minute video on how it actually works. And they're saying, get in on IPO action at the IPO price in the SoFi app. Eligible active invest members can participate in upcoming IPOs before they trade on the exchange, only in the SoFi app. So that's the gist of it. And let's watch this video explaining exactly how it works. And I will get to live chats. Leave your comments below in the live chat. I'd love to hear what you guys think, and we can share in a few minutes after watch this video. They've broken down. It's very simple how it works, right? The SEC, Securities and Exchange Commissions, they make it seem more complicated so that they can say, oh, we want to protect retail investors. You can only invest in IPOs if you're accredited. You can only invest in private companies like Airbnb 10 years ago, Uber 10 years ago, right? Before Google 10 years ago, 20 years ago, Amazon 50 years ago. Only if you're accredited, only if you're rich already. If you're poor, you don't know how to think for yourself. So we're going to protect you from yourself, and you cannot build wealth through investing in private companies. It's too scary for you. So you get to stay poor, right? That's the whole thesis. That's the premise of why they keep us poor. But SoFi is saying nope. Social finance, we're democratizing finance. So SoFi is changing the game. Let's watch how they're doing that right now.
SoFi now offers eligible members the opportunity to participate in an initial public offering, or IPO. This gives you the opportunity to buy shares of companies before they are listed. Here's how it works. Once you've downloaded the SoFi app, opened and funded your SoFi Active Invest account, click the Invest tab and look under IPO Investing. To get started, select an IPO. This is where you enter your indication of interest, or IOI. Note that eligible members are able to participate in multiple IPOs, but can only select one at a time. You will have to answer some questions. To participate, you must have no beneficial interest in the company, and you cannot be affiliated with any broker-dealer. Next, you enter the number of shares or units you are interested in purchasing. Read all of the important notifications on the screen, review your inputs, and submit. You can now repeat this process for as many available IPOs as you want to participate in. At this point, make sure you'll have enough money available to purchase those shares when the time comes. Eligible members must have at least $3,000 total account value across all of your SoFi Invest accounts. Your indication is like a reservation to hold your place, but it's not binding. You won't be able to modify your IOI, however, you can modify your order when you come back to confirm it. SoFi will alert you when it's time to confirm your order. It's important to act quickly, as you will only have a short period of time, likely only a few hours, to confirm. To do this, click again on the Invest tab in the app and click IPO Investing. The next few screens allow you to review your order. Read them carefully, click Confirm, then Done. Even once confirmed, not everyone is guaranteed to get shares. On IPO day, you will receive a notification alerting you to check if you were allocated any shares, and if so, exactly how many. Please note that the number of shares you are allocated might not match your order because of availability. If you were allocated shares, they will show up in your SoFi Active Invest account. It's a good idea to read up on this process, the fees, and how this fits into your overall investing strategy before you take part.
This is freaking huge. This is, no joke, huge. I can't stress enough how big of a deal this is. I am getting chills because this is really changing the game. We are about to build so much more wealth. Of course, there's a lot more risk. There's a lot more risk to invest in the night before of IPOs. But that's for us to decide. That's for us to choose how we take our risk. Right? That's what we learned in this whole GameStop saga. They said, oh, we stop the selling of shares or the buying of shares so that we can protect you from yourself. Right? We don't let you invest in private companies because it's too scary for you. Right? We got to keep you safe. You can only invest in private companies and IPOs if you have at least $1 million in net worth and $250,000 in income every year. That's not your choice, SEC. That's our choice. If I want to take a risky bet, I'm going to take a risky bet. Let me do that. Let me build my own wealth. That's how we build wealth in this country. We take risk, and we hopefully, if we invest for long term, we get to build wealth too by growing, right? By benefiting from the appreciation of the value of assets, right? That's how you build wealth. And we've been locked out of that for so long. It's been a terrible crime against the poor. They've kept us poor for so long. And now we're getting a chance to actually participate in these IPOs. And it cannot be understated how big a deal this is. So if this all goes well, if this all goes as planned, this is going to be big. This is going to be very, very big. And I am super excited for it. Just not even for myself, because I can invest in private companies by just going and working for private companies. That's what I do as a software engineer. So I've invested my own money into private companies because I get those stock options and I get to exercise them within 2 years after I leave. So I've done that, right? I got private shares, but most people can afford to go work for startups because they're very risky too, right? Most people don't have a chance to invest in startups. So if you were an Uber employee before they went public, you benefited. You're super rich right now, despite how their public shares have fluctuated, right? Because you got in at a few cents per share. You got in at a few dollars per share, and then they go public. They're at $40 per share. You're already 40x. Even just the IPO night before. Once the IPO pops on IPO day, which we've discussed that many times on this channel, IPO pop. We've discussed the IPO pop, what it is, and why it's such a terrible thing for both the company and for people on the stock market who aren't buying the stock on the day of the IPO, because those institutional investors, they get in early. And in fact, let's just watch a video real quick, just explaining that. Real quick, let me show you. This is my own video, so let's just watch the intro of this, and you can see. Yo, Jam, what's going on, man? We did it again, man. Yeah, we just keep swindling them. It's amazing. We just, these IPOs, they're great, right? This is what IPO dreams are made of. We get in for like $45, and then these retail investors and all those other fools that didn't get allocations come in and they buy for $70. Isn't that amazing? Just like Snowflake. What a great time for us, you know. You know what, Jim? Just like we did with Snowflake and Airbnb and Facebook and all the others, we're going to pop some champagne tonight, baby. You know what? I got the champagne already. So we're going to be popping the champagne tonight. And for the rest of the year, as all these IPOs come, you know what? If Robinhood comes out, we're going to 3x that. We're going to get the IPO pop going, baby. You heard me. Yeah, we're going to swindle them like we always do. You know what? I don't know what it is. Moet and Chendon. Yeah. We're going to pop that, baby. Yo, Jim, you're not on air, right? You're not on air, right? You're on air. I met the SPACs. The SPACs, they're the scams. They scam the retail. They scam the hedge funds. They don't disclose enough information. You know, I'll call you later. I'll call you later, Jim. I gotta go. I got some champagne here. I'm gonna go. Gonna return this to the store because IPOs are legit and they don't do anything wrong to the companies and the retail investors. No one gets screwed over. We're all in the same playing field. It's all even. I'm gonna go return this champagne now. So I'll call you back later, Jim. Take me off air. Take me off air. Hey there, Lincoln here from Bull Academy. So that was a fun skit to do, but there is truth there. They're laughing at us. They laugh at us every time there's an IPO, and they get in at half the price or 4x premium or what's it called, discount, and then we come in and CNBC and Fox Business and ABC and all the big names come out and say, "Oh, this is such a great deal. This is going to be amazing," and we're buying in at ridiculous prices, and they're laughing because they can't lose. Because even if the stock falls 50%, they got in at 100% discount. Even if it falls to 25% before the lockup period ends, they still don't lose. They still win. And we've been locked out of that for so long because the only way to get an allocation in IPOs is to be one of the very wealthiest clients of the big investment banks that take these companies public, Credit Suisse and JP Morgan and all the other investment banks out there. They only serve their richest clients. And then, of course, there's a small block that's left for retail investors. But just for you to get into that, you got to be very wealthy. So people like SoFi and Robinhood just said yesterday that they also are working on doing a similar setup as SoFi. They're going to change the game. So SoFi has some caveats here. They say, make sure you're eligible. In order to participate, you need at least $3,000 across your SoFi Invest account. So if you're using Robinhood, doesn't qualify here. You have to have money in SoFi and using it for their stock brokerage. It's just like Robinhood. They have it's free trading, free stock trading, and ETFs and all the good stuff. Then they have their own ETFs, and they say you can submit your indication of interest, select the IPOs that you're interested in, and then you confirm your buy. And you might not get your full allocation. You might not get what you want, but you will get some, right? If you ask for 1,000, you might end up getting maybe 500 or 750 shares or whatever, right? Some smaller percentage than what you actually ask for because there's so much demand, right? Everyone can't get what they want. So that's the caveat. But at least you get a chance to get in before the IPO day, and then you can average in up or down, right? But you still win by getting in before the night before. That's the value here. That's big. That is huge, right? IPO investing now for the rest of us is what SoFi says. SoFi is for the people, right? They're millennial. Their whole company revolves around serving millennials, right? The next generation, helping us get our money right is what they say. That's their slogan, right? Get your money right. So they say here, traditionally, the access to IPOs before they've traded on the exchange has been reserved for large institutional investors. Eligible SoFi members with at least $3,000 now can participate. And then they have a bunch of, you should read these articles. I'll leave the link to below, sofi.com/invest/IPO-investing. They have a bunch of resources here for you to read. What's an IPO? How's the IPO price set? I've explained all of this already, so you should go watch my video on that. And buying IPO stocks, what you need to know, navigating the IPO lockup period, and so much more. What are SPACs? And you should read these things. So I just highlighted a few things here that are important. And they already covered most of this, but I want to just point out a few things real quick, some caveats. So the most important thing, we already knew this part, but the most important thing down here is what is the SoFi IPO flipping policy? So before we get to this, let's just look at the live chat real quick and just read out some live chats. If you have any thoughts, just comment below. They say, Han J. Lee says, thanks for sharing your vision again, Lincoln. Of course, Han, thanks for being here. And I'm Focused Man, that's your username, says, thank you for putting this together. And Austin has a shocked face. Yes, this is very, very amazing. And Tom Stewart, patron, says, "Wow, that's awesome." Austin, game changer right there, man. And Tom also says, I wish that was available to me." All right, you're not in the USA. This is probably just a USA thing, right? I can see a lot of people switching to SoFi. Yes, this will be big. If you're on Webull and you don't have this, you're probably going to switch to SoFi. If Robinhood takes too long to get this out, you'll probably switch to SoFi or at least add SoFi. I have multiple brokerages. I use Robinhood for my growth stock because I like Robinhood the best for stock investing because it's just the smoothest. But then I use SoFi for my passive investments. I use M1 Finance for my even more passive emergency fund investing. And I don't use Webull. It was too complicated for me, so I didn't get to that. And I have Charles Schwab for my more risky bets like warrants, investing in warrants and over-the-counter stocks. So you can have multiple brokerages. So people might switch to SoFi from Robinhood, but they also might just add SoFi as one of their options. So yes, Tom's completely correct. And to the city, because I can't read the rest of your username, says, "Wow, this is big." And S. Adams says, "You should audition for a movie." I would if I had better memory. I suck at memorization, so I couldn't get the script right. But I enjoy improv. So thanks for that compliment, Adam. So let's read here what the SoFi IPO flipping policy is, because this is important. As you know on this channel, what we do is we practice the bull mentality. And if you don't know, the bull mentality is that we know what we invest in, we understand what we invest in, we believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. That's how we give ourselves the best chance of success on the stock market. So SoFi agrees. SoFi does not want you flipping your IPO shares. And it might not be SoFi's policy, but also it just might be the SEC's policy. I don't know for sure, but SoFi has said here that if you sell your IPO shares within 30 days, in the first 30 days, calendar days, post IPO, after the IPO day, then you might be limited in your ability to participate in the future IPOs through SoFi for a defined period of time. So that's what they're saying here. Don't flip your stocks. Don't sell your stocks within the first 30 calendar days. Otherwise, you'll be limited. And here's the limitations down here. They go into it more. And they say, I'll read it straight. They say members that have obtained shares units of an IPO through SoFi and sell within the first 30 days post IPO are considered flippers. Don't be a flipper. And may be prevented from participating in future IPOs for 180 days upon first violation, and 365 days upon a second violation, and permanently in the event of a third violation. Do not be a flipper. If you use this, do not sell your shares within the first 30 days. You can do it, but these are steep punishments, right? You will be prevented from participating in this system. And I think that's fair, right? They're giving you a chance to get in early, and not everyone gets allocations, right? This is first come, first serve, or however they're going to do it, round robin or just randomly. So this is a privilege. So if you are here trying to flip the IPO on the within 30 days, don't do it. You're not going to get to participate anymore. It's a very steep fine. So I would greatly do your best to avoid doing that. And then they also say, in addition, SoFi may charge a $50 fee for the sale of securities obtained through the IPO process if the sale takes place within the first 120 days post-IPO. This fee will step down to $5 for each subsequent sale that takes place within the first 120-day window. So again, these are steep fees, steep fines, and punishments that you do not want to. It's not worth it, right? Don't try to swing trade these IPOs. You'll never know, right? We've seen IPOs go up. Let's see Jumia real quick. Let's look at Jumia and just give you a very quick example of why you don't want to be swinging these IPOs. So Jumia, one of my investments, they came out. What was it? They came out on the 2019, and they popped. Right, this is what I'm talking about. You see this? The people who got in pre-IPO, which we couldn't do before SoFi changed the game, they got in at $20 per share or even less, right? The IPO price is not what you see here. Let's actually look at Jumia's IPO price. $14.50. $14.50 was the IPO price for Jumia. And you know what the very first marker is here? $20. $21 is where you could buy in on the IPO day if you are a retail investor. The institutional investors got in at $14.50 and immediately got a what? 20% 20% return on investment. Look at that. So 30% return on their investment. Just by being rich. Because they're rich, by the merit of being rich, they got to become more rich. That's how the system screws the poor. So this is Jumia. They popped and then they went back down, right? Within the first few days and first few weeks. And then it went way down, right? But then if you held long, I bought around here. I bought super cheap. And if you hold long, you get to ride up when these things recover, as long as you know what's going on. So that's why you don't want to try to swing trade things. You can never time these things. You don't know what's going to happen. This was a scandal right here, right? But then the company figured things out and they worked their way up, and now they've been riding up so far until, of course, the corrections came. But they're still up 64% in the last 5 years. So this is why you don't try to swing things. And let me just show you another example with these IPO pops. Let's look at Airbnb. Oops, what did I do? Airbnb, their IPO price. Let's look at Airbnb's, I think it was $68, but let's look at it. Airbnb IPO price was, what was it, $44? $50? What was it? IPO, sorry. I'm not sure why it's not showing up. I think it was 68. Yeah, 68. That's their IPO price, $68. $68. And you know where they're at right now? They're at $175 right now. And you know where they were on the first day? They were over $100. You know who won from that? Institutional investors who got in on the night before. Because only they could get in early. And then the rest of us had to buy in at over 2x and then 3x, right? That's how they keep us poor. So SoFi has changed that game. This is huge. And we can look at Snowflake, another egregious example of keeping the poor poor and the rich rich, right? Snowflake. Their IPO price was 100 and something. Let's look at it. Snowflake IPO price. 120. Snowflake's IPO price was $120. That's what the rich paid. That's what the institutional investors paid the night before, because they got allocations in the IPO, the pre-IPO shares. And the very next day, on their IPO day, it was at $245. $245. That's more than double. That's more than 100% return on their investment in an overnight success, because they were rich. And for hundreds and centuries so far now, we haven't had a chance to participate like that. That's how you build wealth, participation. And the SEC, the regulators, have kept us out all this time because we're not smart enough to make our own choices. But SoFi said, nope, we got to change that. Look at this, $245. So comment your thoughts in the live chat. I want to hear what you guys think about this. And we can look at one more, DoorDash. So DoorDash is at 132. And let's look at, of course, they went down. This is the risk of buying IPOs, right? If you buy an IPO on their IPO day, there's lots of risk. But let's look at DoorDash's IPO price. DoorDash IPO'd at 90. No, it was at 102. It was at 102. Look at this. This is what I was saying earlier. Look at this. On the IPO day, they IPO'd at 102. The people who bought in the night before, they got in at 102. On the IPO day, it was at 190. Retail investors bought at 190. The rich bought at 102. And then that's not where it ends. Look at this. it falls, right? They say IPOs are risky, and it falls, right? It falls to 139. But that's still more than 102. The rich never lost anything. They haven't lost a dime. This is ridiculous. This is how they keep us poor. And they keep getting richer. It's a meritocracy, they say. Pull yourself up by your bootstrap, which is physically impossible. You can't pull yourself up by your bootstrap. It's not possible. We co-opted that to make it some sort of American dream slogan. It's literally not possible. And they say all of that, all those monikers, while screwing us over. But now we have a chance to participate. And that's how SoFi is changing the game. And it's not, I can't say this enough. Can't stress this enough how big of a deal this is. This is huge. This is ridiculously big, right? And those are some examples of it. Even though DoorDash fell after his IPO day, and look at this, it's still at 125, still at 132. That's still far above 102. I can just laugh because we had no control over this. I don't get stressed out over things I can't control, right? All we can do is work within the system we're given, right? So we couldn't really say much to that. We just had to go with the flow, right? And take what we got. We took our peanuts. We took what they handed us, right? They say you can't invest in pre-IPO. Okay, fine. Give them the IPO. I'll invest in that, and I'll wait for 10 years to get 50% return or whatever, 5x, 10x. But they get 2x overnight. 2x, 3x, 4x overnight. And now we have a chance. So now let's talk about SPACs. Because I've discussed before how big a deal SPACs are for retail investors. And let me find the video real quick. So yeah, I've discussed before, way back, how big a deal, and I've explained SPACs in many videos and walked and broke them down and their warrants and all of that. But then I also went through and really broke down why SPACs are such a big deal, and it all centered around this exact topic that we're covering right now. That we never had a chance to participate in pre-IPO companies before they popped. But SPACs came in and said, hey, you can invest in the sponsors at $10 per share. You can invest in Bill Ackman. You can invest in Chamath Palihapitiya. You can invest in Foley and all the other big namers out there that are taking all these companies public through SPACs, special purpose acquisition companies, and then they pop. You've seen QuantumScape. You've seen Laser. You've seen CCIV, Lucid Motors pop in by 6x in 6 weeks, and you know who won from that? We did, the retail investor, because we were able to participate in the SPACs surging, right? We bought in at $10 per share. And then the hedge funds came in, the institutional investors came in, and they bought on FOMO, which was what we usually have to do. But then SPACs gave us a chance to get in early, right? And we seen the same thing with IPOE SoFi. If SoFi came out, SoFi I think was number 11 on CNBC's top 50 disruptors list a few years ago. So CNBC is a household name. CNBC is an Airbnb, is a DoorDash, is a Robinhood, is so much, and all of those guys, right? Not CNBC, SoFi. Sorry, SoFi is all those guys. So if SoFi went through the IPO route, they would have had a huge pop too, and we would have had to buy at 2x valuation, 3x valuation, 4x, right? But no, Chamath came out with the IPOE SPAC. And I've covered the IPOE, the main points of the IPOE memo that Chamath released in January. And we got in at $10 per share on that. But if SoFi came out, we would have been buying on the hype. We would have been burnt on the IPO pop, which hurts us and the company going private or public because they sell their shares to institutional investors for a discount the night before, and they leave a whole bunch of money on the table to the tune of hundreds of billions of dollars collectively. And I've covered that. If you want the actual coverage, go watch that video. Just search on bullacademy.org. And you can see how we've been so royally screwed by this system for so long. And now we're getting a chance. So now the question is, what about SPACs? How would this affect SPACs? And I don't know yet. I have to think about that more. But this was one of the biggest value of SPACs, that we got to get in early, participate in the appreciation of all these companies before they actually go and become public companies. So we've seen that so many times, that we get in at a good price, $10 per share, and they run up once everyone finds out, right? Peter Lynch says the institutional investors Peter Lynch is a legend of a mutual fund manager who realized 29% annualized returns at Fidelity for his tenure. So he knows what he's talking about. And he said the way you beat Wall Street, the way you beat the institutional investors, is by getting early on 10 baggers. You find the small companies that have a chance and potential to become big and foundational in their respective industries. And you buy them before the hedge funds come in, right? So we found all these SPACs before all the big names really caught on, and we were able to participate in that. And that's been great for us. So now with us having a chance to participate in IPOs as well, that's just more the merrier. Some companies still don't want to go through a SPAC route because it has some stigma from back in the day when it was scammy, right before there was more regulation and better policies. So SPACs are great now, but they still have a bad name. They still don't have a great name. But that means that we get to participate in SPACs and IPOs now. This is going to be big, right? So time will tell how SPACs are affected by all of this, because IPOs still take longer to go through than SPACs. SPACs you can do in a quarter, 3 months, but IPOs take like a whole year sometimes. So SPACs still have a leg up in that respect, and they are, I believe, cheaper. They're way cheaper for the private company going public than an IPO, and they still do let us invest in the sponsors that we trust, like Bill Ackman and Chumafali Abatia, and ride their bandwagon. So there's lots of value in both SPACs and these IPOs, and now we get to participate in both of them, and that's why I'm so excited. And then of course I'm an investor in IPOE, SoFi. So I am winning twice. And if you're an investor in IPOE, if you haven't seen my video, if you want to invest in IPOE, you want to learn more about SoFi, go watch our video on that. This is what you're seeing on your screen right now. So it's huge. It's huge. And I want you to understand, do your research into IPOs. You can watch our videos. You can look up other videos. You can go on Google and search all of that. I will cover more about this as we get more information and people start actually using this feature. So I'll cover it more. But cannot be understated how big a deal this is. And I'm so glad it's SoFi that is pushing this envelope again. SoFi has been ahead of a whole bunch of movements, and especially high yield interest rates. So I'm very happy about that. I try not to push too many companies, not to push too hard on companies. I don't want you to just take my word for it, right? But I like to share with you what I'm passionate about. And I'm very passionate about the companies I invest in. I only have 7 in my growth portfolio. So I'm very passionate about all of them. And SoFi is my largest position by far. So I am super happy that SoFi is continuing their path towards making it easy for millennials and anyone to really get their money right. That's their slogan. To invest, to save, to invest in homes, buy a home, right? Go to school. And of course, Chime, one of the biggest fintechs out there, is built on top of SoFi's Galileo, a fintech infrastructure company, right? So SoFi has so many different units of value. And this is just one more. This is great. And they might not make money on this. They might not make any money on this feature, right? And their CEO has said, hey, there are some features, some units that we make lots of money on, but there are some that we don't make money on. And the reason they do that is because they get that free marketing. They get to get you into the ecosystem, just like Apple, right? You buy an iPod, you buy an iPhone, you're stuck in your ecosystem. Now you have to buy a MacBook Pro and a iMac and all the other, and iTunes and all that other stuff, right? And Apple TV. It's the same idea. SoFi gets you in with the high yield interest rates, and then they say, hey, do you want to refinance your personal loans or your student loans? Do you want a personal loan? Do you want a home mortgage? Do you want a credit card that is better than all the other credit cards out there because we actually care for you? We might not actually make money on this, but we're gonna give you more loans, right? And with better interest rates and a better process and small business financing and all this other stuff. So again, SoFi is changing the game here with the IPO investing. It's gonna be big. Okay, so I've said that enough. I know I would love to hear your thoughts, everyone, in the comments below. If you enjoyed the video, like the video below, subscribe to the channel, hit the notification bell. Before we go, let me read one more live chat. Peru Invest says SoFi IPOE will be the new SQ Square. My name is Peru, and I approve this message. Thank you, Peru. I appreciate it, and I hope that you enjoyed the video. It's been 40 minutes now, and I've just been praising SoFi. Of course, they have their risk. Look into it. I don't want you to just take my word for it. Do your own research and watch all the videos. So be an informed investor, right? With great power comes great responsibility, right? We're being given more opportunities here, so we have to do more research because this is more risky. Investing in IPOs is more risky because most IPOs are going to flop. Most companies are not worth investing in, right? The same for IPOs, the same for SPACs, right? The same for startups. Most things will fail, right? Or they just won't do as well as you would like them to, and then some of them will be bought out. Some will go bankrupt, and some will just lag on forever, right? And get you no returns or pay you dividends so that you can live on passive income, which you know how I feel about that. Or if you don't, I've covered dividends in the past and broke them down how they work, but I've also discussed my own feelings about them and why I don't invest in dividends. So point is, this is a great opportunity for all of us, but it is more risky. So do your research, read up on the resources that SoFi provides here, and check out this feature. I'm gonna check it out once I have the chance, but I'm excited. So if you enjoy it, again, you know what to do. And if you want to help the channel grow and reach more investors, get more access to me, and support us financially, and get direct answers to your investment questions, and participate in our Discord channel where we share knowledge, discuss the stock market and the SPACs and stocks that we're all investing in real time, then join us over at patreon.boacademy.org. And yeah, you get a community of investors who have similar ideas about investing for the long term and being patient and building long-lasting sustainable wealth. Then join us over in our Discord channel. Again, patreon.boacademy.org. I would love to have you over there. There's about 100 of us now, and the more perspectives we have, the better we all are. So thank you again for watching this video. I'm Lincoln with boacademy.org. Thank you again, and have a great day.